It's Monday, April 21st. Let's level up. Market had a decline today. I think this was because no trade deal, and of course the dollar continued weakness is hurting markets. Higher interest rates as well. I think a lot of this has to do with the market not loving the new budget. If it gets up to where they want to put it, it's going to be a little bit of a problem. This conversation about Powell being fired makes for interesting airtime, but not really too much for markets. As far as the VIX goes, I have an alert below today's low of day at 71.78. I think if that breaks and sustains, we could see a run back down into the 29s, but I don't think the bulls are out of the woods until they can break 28.32 to 29.57. If they can do that, I think the rally is on like Donkey Kong, probably with a higher low. We'll talk about that scenario in a moment, but as long as we remain above that level, I think that the risk is sideways to lower in markets. As called in real time today, futures bottomed right on the channel low. They're bouncing. If they were to rally to the channel high by the open, there's resistance between 52.51 and 52.62 half. If we continue to pull back, anything below 51.80 quarter to me is vulnerable. Today had poor lows, so it is possible that they are repaired. We saw a little bit of a short covering rally into the close, but I don't know that that's something to latch on to unless there's news. I think if the bulls can get over 52.56 quarter, the next resistance becomes 53.40. Q's similar situation. Bulls there will need to hold 19,923 quarter. The first resistance comes in at 18,116 quarter, and then after that at 18,268.75, which would line up with the 100 MA 30 minute by the time it gets there. Similar situation there with ES. 100 MA 30 minute could be some resistance. In the after hours tonight, the 50 MA 30 minute is acting as some resistance. So generally, 50 MA 30 minute, 100 MA 30 minute, 200 MA 30 minute are key for upside resistance points. If the bulls can recapture those and then start holding them, then we might shift our bias. But as of now, it still looks to me like rallies are being sold into. And keep in mind, our low of the move happened in an overnight session. We did have a very big rally off those lows on the postponement of the tariffs, but it doesn't necessarily mean that those lows won't be revisited. We'll talk about that scenario in a moment as well. As far as SPY goes, big rally on 4/9 was the tariff day. Then we rallied right up to the prior breakdown at 549.68 and then have been pulling back. It wouldn't surprise me to see a move down to that low of day at 493.05, and then we'd see we have the potential for a higher low here. For that scenario to trigger, the bulls will need to get over high of day at 521.70. If they can do that, I think we actually run up the flagpole to the 20 MA at 540.92 and maybe even revisit the high of day from 414 at 544.28. On the downside, I told you 493.05 and then of course a revisit of the 481s and 480s. Now, it's possible that we have a double bottom there and we hold. If we don't and we have a leg lower, I think that that looks like something like 446s to 449s and possibly a repair of the 1113 gap fill at 440.19, where I actually think the decline could end. If you want to play some kind of a longer dated put ratio, playing for those 480s and 440s, maybe with a longer dated overwrite closer to 409, 410, I think that that makes sense. And I could show you why for that in the midweek video, but those are the levels. As far as Qs go, similar situation here. Rallied right back up to the breakdown point at 466.43. If we were to go retest the tariff day suspension low, it'd be 415.43. If we have a higher low today over 439.09 would trigger it, and I think we would fill in the gap from 415 and get to the 456.99, and then we'd see that'll line up with the 20 MA by the time we get there as well. It's also the downtrend. On the downside, like I said, we could get into that tariff day low zone at the 415.43. That whole zone, though, of 414.07 to 423.45 to me is very significant. Now, if we can't hold, and let's say we lose the 400s, the next big levels on the downside would take us to 377.21 to 368.10, and then maybe a move all the way down to the 468.08 and move down to the 346.08. Anchor VWAP is down there too at 352.06, so that zone to me could be a lower side target if you're doing some kind of a put spread or put ratio for protection. Apple's getting it from all sides. I do like this one if it is lower into earnings. If they rally it ahead of time, careful, because I don't think the guidance is going to be super great. If it's down and we get the shake and bake setup, we will take it every day of the week and twice on Sunday. Right now we're on the 10 MA. I think the bulls there to get out of the woods will need to clear the 20 MA, but there is a big resistance zone now between 203.98 and 208.42, and the 20 MA is right in there. I will assume that that area is resistance until it's not. Be wary of a premature rally. NVIDIA, which I had the pleasure of being short, and I'm actually still a little bit short, I think high of day is a good stop there, 99.44. I think if the bears give up a hundy, could make a move back up to the 107s and maybe even into the 113s. On the downside, 90.69 and 86.62. I'd love another down day or two and cover that up. Leave on my overwrite. I have the 75 on the overwrite there. Netflix reported they had a nice big up move, but it got sold. Tough day to report into. High of day was 1,019, so that will need to clear. It was shy of the after hours high of 1,024. Generally, though, I think anything below 999 is weak. Above there can run, below is sideways to lower. Super simple there. Tesla's reporting. I think the pessimism there has built up to a crescendo. I'd love to see this lower into the number. Anchor VWAP's just below a 210. I suspect Elon Musk is going to give some update that will assuage market concerns. I do expect him to stay on as an advisor after his period of time at Doge ends, but I don't think he's going to do anything that's going to spook the markets. If he does, 182s are on the table. Amazon got downgraded today. I think it was a bit of a late downgrade. There is some support in the 161s. If they do report and they get nailed, I think they're going down to the 150-ish area. So that zone could be a buy the dip. Anywhere really between 143s and 150, I think, is the zone to buy into. Over high of day, I do think that there could be a rally over 169.60, maybe even all the way up to the 20 MA at 185.56. But again, leery if these things happen before earnings. Google has antitrust issues, but the money flow is not confirming new lows. I think if we have a move up over high of day at 148.95, we could see the 10 MA at 152.77 and the 20 MA at 155.63 or lower, wherever it depends to be. I do think that has come down quite a lot. I think a lot of the pessimism is baked in. What I'd like to see there would be a bad report and the stock not go lower or open on the lows and close on the highs. I think that's, by the way, going to segue us into gold, which I'm expecting to see a situation one day where we open on the highs and close on the dead lows, and that will signal the top in gold. That being said, we're into my next level of resistance here at 316.65. We're actually trading above that in the after hours. I told you the full Monty plus the 4.236 is 327.53. That for me is going to be end line zone. I think that area is the spot to book profits. It may overshoot. Maybe they'll take it up to 400. It's possible. You never know. But I can only go by level to level, fib to fib, and MA to MA. And we are now getting into extended territory. Remember, I told you gold doesn't end in a whimper. It ends in these big up candles or big up gaps. And we're getting them. We're starting to hear things that are wild predictions on the news. These people were all super late to it. We were early on gold. I do like trimming into these gains. I think you can keep raising stops now to low of days. The thing that worries me when you start having moves up like this are the game of musical chairs. So look for that high volume day reversal. There'll be a lower high before it gets into any real danger. So if you don't catch the very tippy top, it's okay. But I would be trimming into some of these pops. Bitcoin, I told you I thought is a good idea to start rotating into. We practice what we preach here. The 89,020 zone to me was some resistance, good area to trim into. I think you could raise your stop to the 50 MA at 87,073. Next big resistance zone is 91,455 up to 93,141, wherever the 100 MA is. If you want to do the whole fib to fib thing, 92,403. Leery on this if it breaks the 20-10 MA confluence. Currently 83,935 up to 84,305. That's the maximum allowable pullback that's acceptable. But anything that remains over that 50 MA, I do think could see the 100 MA. Generally speaking, markets are still in declines. We are seeing poor lows. We are seeing bounces. Until the declines can end, meaning stocks break downtrends and get over 20 MAs in particular, I remain leery, but I do think bounces can come quickly and sharp, and they will likely be on news. I think the market needs to see some trade deals. They need to see some stability post-earnings. They need to see the dollar stabilize. Anything below 99s could see 94s, believe it or not, and that will get everyone super freaked out, although it will be good for repatriation on foreign earnings. But in the short term, algorithms are tied to these things, and they become problematic. Anything that gets over 4.5% in the 10-year will also start freaking people out. So I'd feel better with that below 4%. Like and follow for more.